Hey, this is Terry Fleming with Coldwell Banker Hedges. Are you thinking about buying a new home? I want you to take 2 minutes to watch this short video to see how the low interest rates of today are impacting your monthly payment and actually how much house you can afford to buy. Listen to these numbers, plain and simple. They do not lie. All right, let's start off with this first example. Let's say you are gonna go and you wanna get a $100,000 mortgage. The current interest rate now is about 2.5% for a 30-year fixed loan. So let's say you go and get that 2.5% for a $100,000 mortgage. Here's what you'd be paying in principal and interest. Check this out. Principal and interest, you would be paying $395 a month. Now, let's compare it at 4.5%, which was not that uncommon a year or two ago. So a $100,000 mortgage at 4.5%, your principal and interest would be $507 a month. So you can see how much more that is per month. That's a total of about $112 a month. So you take that times 12 months for a year, times 3 years, times 5 years, times 10 years. You can see that adds up to be a lot of money. All right, now let's take this scenario. Let's say you want to qualify and get a $200,000 mortgage. Let me show you the numbers on that. All right, so let's say you're getting a $200,000 mortgage at 2.5%. You're going to be paying $790 a month. So $790 a month for your principal and interest on a 2.5% $200,000 mortgage. Pretty darn good. All right. So next step, let's take a look and compare it to the 4.5%. Here we are at 4.5%. For a $200,000 mortgage, your principal and interest is going to be $1,013. All right. You're going to have a savings of $223 a month if you get that 2.5% mortgage versus the 4.5% mortgage. So again, think about that savings of that 2.5 versus 4.5% on a $200,000 mortgage over 3 years, 5 years, 10 years. At 10 years, you're going to be saving over $26,000. I mean, that is incredible. All right. Now here's the other situation that I want you to think about. So here's the other thing, you guys. With the lower interest rate like that, you can qualify for a more expensive house. So at 2.5%, you might be able to qualify for, say, a $240,000 or $250,000 house. Whereas at 4.5% interest, you might only qualify for a $200,000 house. So you can plan on saving more money, or the other option is maybe even upgrade and get a little bit more of a home for the price and still kind of have the same monthly payment. So a couple of great options out there with that low interest rate, you guys. I would love to help you out. I would love to help you buy a house. Love to help you with that low interest rate. So again, this is Terry Fleming with Coldwell Banker Hedges. Shoot me a message down below. I would love to help. Thank you.